We are now joined by Annabel Bishop to review some of the economic data and news from the past week, as well as preview what's important to watch next week. Annabel, being, of course, the chief economist at Investec, let's start by looking at the IMF downgrading South Africa's growth forecast and where that puts us with other emerging markets peers.
You know, they have also downgraded the growth forecast of Russia, and that's down to about 0.2, so we haven't fared as badly as them. And obviously of Brazil as well, and a few other emerging market economies, so it certainly does seem to be the trend. But they've also downgraded their global growth forecast slightly as well. But I think the reality is, you know, South Africa would have had to expect a downgrade in its growth forecast, given the fact that our industrial production sector saw substantial strikes running through all 3 quarters of this year to date.
Annabel, staying with the IMF downgrade and maybe taking a step back, just last week we heard that President Zuma was focusing on accelerating the implementation of the National Development Plan. Do you feel that his words are connecting with the international community that is looking to this NDP to respond to all sorts of economic challenges that we have right now?
You know, I think the President is in a very difficult space, and you know, I was thinking about this, and I think, you know, if you have a look at the labour laws and regulations, the changes that have been happening over the past 10 or 20 years, you know, it's certainly regulated that they can strike, and the strikes are protected, and that these strikes are tending to be quite protracted as well. So I think what really needs to happen is there needs to be some reassessment of whether these labour laws indeed are serving the South African economy or not. And I would say, you know, they are damaging it when you do have industrial production strikes running through 3 quarters of the year to date, which is what we've seen, and perhaps they do need to be revised quite substantially. In particular, very violent, destructive, prolonged strike action does actually need to be outlawed, because it's not helping South Africa at all.
Let's take a look at the ongoing NUMSA strike. We know that the economy is losing about 300 million rands a day, and we're also expecting that our second quarter growth figures are going to be much lower than expected. What do you think is going to happen going forward? Like, what is your forecast in terms of our growth figures for 2014 and 2015?
I've got a figure of 1.6, and I'll tell you why. Even though, as you quite rightly said, the second quarter is proving worse than the first quarter, the concern really is that we are seeing a reweighting and rebasing of our GDP figures in November. So in the final count, we may well find that the mining and manufacturing sectors have shrunk so significantly that indeed there was less of a recession, even no recession, in the first half of this year. And that in turn could actually see the GDP growth outcome rise somewhat. So clearly, you know, this is not the right way to do it, to boost economic growth through revising one's figures. But you know, that said, it is something that happens typically every few years. They do reassess the size and the calculation of our economy, like they have obviously done recently in Nigeria.
Annabel, looking at the CPI number that came out earlier this week, lower than expected, coming in stable at 6.6%. But does this then justify that 25 basis points rate hike that we saw earlier?
You know, I think the 6.6%, it was even marginally lower than the previous 6.6% if you look at it in fine detail. But I think what's really happening in South Africa is we've seen inflation rise in the first half of this year. We expect to see it fall in the second half of this year, because we're already seeing downward pressure on agricultural and manufactured food prices at the PPI level, and we clearly expect to see this feed through now to the CPI level as well. There is obviously a lag, and we are in that lag period, but we do obviously expect to see as well the fact that we have a bumper maize harvest. The maize futures have come off so very substantially, contribute to lower food price inflation at the CPI level, and then obviously to lower CPI inflation itself, because obviously food is a very large component of CPI. So I think the Reserve Bank's not looking so much at what's happening now. They're probably looking at what's happening next year, and to my mind they're placing a very heavy emphasis on the expected normalization of global monetary policy, particularly higher interest rates in the United States next year, and with the most recent publication of the FOMC minutes indicating that tapering may end a little bit earlier this year in October, and that possibly the first interest rate hike could come as early as June next year. Perhaps that is what prompted the Reserve Bank to push for this 25 basis point increase.
In following up with what Fed Chair Janet Yellen has said about interest rate hikes in the U.S., do you think that the governor is also going to be increasing rates in the next 6 months for South Africa?
You know, I don't think we're going to see an interest rate hike in the United States before the second quarter, but really rather more before the third quarter of next year. You know, the markets are fully factored in a 75 basis point hike, and the United States tends not to upset their markets terribly. So from that point of view, we've already done 75 basis points this year. There's no real need to do more. But if the Reserve Bank continues to hike interest rates now ahead of what's happening in the United States, which it obviously has been doing, then it may want to continue this trend. And I think it's probably running a bit too fast now, you know, given what's happening in economic growth, given the poor state. It's not just the strikes. You know, if you look at the services side of the economy, where the growth drive is really coming from, household consumption expenditure, well, that's slowed very substantially and will slow further when all these interest rate hikes feed through. And of course, consumers are highly indebted, and that's a real worry because they've got far greater sensitivity to higher interest rates now than they had in the previous upward interest rate cycle because of this high level of indebtedness.
Annabel, looking at the currency, we're seeing that the rand has hit a fresh 2-month high against the dollar. It's broken through the 10.50 resistance level. And I know this is always a difficult question, but where do you see the currency going in the coming weeks?
You know, I think what's quite interesting is that we saw a significant increase in geopolitical tensions and risks around the time we saw the interest rate hikes in South Africa. Typically, people believe that an interest rate hike results in increased purchase of bonds because there's an expectation, obviously, that it could go even higher. What we actually saw was a big sell-off of South African bonds after the MPC decided to hike interest rates by 25 basis points recently. And that really is concomitant to what's happening globally, with the expectation that the US is going to tapering a little bit earlier in October and may even hike in June next year. We then saw very substantial purchases of equities by foreigners since the MPC meeting, and that's nothing to do with the MPC, but rather to do with this rebalancing of global portfolios away from risky emerging market countries in Europe and, you know, at the top of Africa, and towards South Africa, which is perceived to be geographically safer. So that's driven the rand stronger. I continue to believe the rand could tick down to 10.40 this quarter. That is my forecast for the third quarter of this year, and it looks like it may well do so. But I think the real situation is the rand is that its purchasing power parity valuation is 8.75, and in periods of quiet news or periods when you do tend to get these investor shifts, it does tend to want to track back there. So I wouldn't be surprised if the rand does end the year closer to 10, but obviously a lot will depend on whether these NUMSA strikes do reach speedy resolution, or whether we see strike action drag through for the rest of this year.
Well, I'm afraid that's where we have to leave it for today. Thank you very much for joining us. That was Annabel Bishop, Chief Economist at Investec.